Hi all, welcome to Sand Compounding. This is Sandeep Anand. In today's session, I'm going to explain why people should not be scared of investing or scared of losing money in investing in stocks. People consider stock market as casinos or gambling, which is really not the case, where investing should be considered as putting money into a business and riding the journey of wealth creation along with the entrepreneurs. As Warren Buffett, the legendary investor, has said, there are only two rules in investing. Rule number one, do not lose capital. Rule number two, don't forget rule number one. And it's so apt because preserving capital is the most important thing in the journey of investing, which generally carries over 20, 30, 40 years in one's life. There are two groups of people. There is one group of people who put lumps of money based on just the tips they get on what the experts say in television or from the near and dear ones, generally from public. They put lumps of money into stocks which are so-called fat stocks or hot stocks, and that'll be at a very peak valuations. And if you put such money, such amount of capital in such high valuations, believe me, your capital will be obliterated. So it's very important to preserve capital and do not just go and put money basis of what others recommend. Instead, do your own analysis. If you cannot do your analysis, consult with your financial advisor. Then there is another group of people who would have burned their fingers in the first attempt in one cycle in stock market, and they would be considering it as that investing is not for them, and rather they do not consider the power of compounding. They don't understand that investing is a long-term process and it needs thorough analysis of businesses before you take decisions. The idea is to have money invested at all period of time, because as Warren Buffett puts it, to finish a race first, you need to first finish the race. And so it's all the more important to keep invested through the ups and downs of business cycle over long periods of time, and you have to choose businesses wisely in which one to invest. And if you continue this journey and complete this period of investing journey, believe me, there will be humongous wealth that is created. So do not get bogged down by the fear of losing money. And the most important factor is these losses that occurs when there is a bear market, when there is a market downturn. These are notional losses, because eventually the stock prices will retrace back to its fundamental valuation based on if the quality of earnings is great, if the management is great, if the fundamentals are good, the stock prices will retrace back to the fundamental valuation, and you will get the money back what it is appearing as a notional loss today, because when the market cycle gets back, the stock price retreats back to its earnings. And so it's very important to understand the concept of notional losses and do not get bogged down by the fear of losses you see on the paper.